There we go. We're going to talk about what are some of the hidden problems that we have that we don't know about, and more importantly, how to solve them. So Nick mentioned that I've been doing this for a while. I've had a front row seat to this roller coaster ride for about a decade now, and I get a lot of clients that come in and they ask, is this AI stuff real? And it's a good question. It makes a lot of sense because we've got some conflicting information out there. We've got on one hand, we see all this big spending, a lot of money being spent on it. We see these crazy adoption rates, which kind of like drive this anxiety. But, spending and adoption don't equate to being successful with the topic. Um, Being successful is something different. Using it and making it work are two separate things. And in reality, we're starting to now have a few years where we're getting feedback that shows that this isn't always working. MIT had a really important survey that came out last year that said 95% of projects are failing. And S&P had another similar result that close to half, 42% of these projects are being abandoned. Right. So the question then becomes to us as finance people who are generally skeptical, hey, does this stuff work? Right? Is this worth paying attention to? And I will tell you firsthand that absolutely 100% total certainty, I guarantee you that AI works. But you got to do it right, right? There are mistakes we can make. It's not as easy to implement this in your organization as it is to ask ChatGPT to maybe help you plan a summer vacation, right? It takes a little bit more when we're doing this in our business. So, um, in this session, I'm going to share with you things that will be useful for you, whether you have started with AI or not, right? So this kind of follows the full gamut. We're going to start with some of our problems. Try not to dwell on them, but we need to know some of the problems that we have. Some of them are hidden that we've kind of gotten used to. And then we'll go through like the real use cases, some common problems people run into before we kind of wrap things up and move into Q&A. So don't forget to put questions if you have them down in Q&A. We'll try to get to as many of them as possible. So let's start with talking about some of the problems, and we'll start with a little survey just so we can get some feedback from you. Nick, do you want to handle that?
Yeah, let's just jump right in there for our audience here. We're going to do a quick poll question, and we're going to keep this open for about 45 seconds. So please answer the following. How do you rate the impact of errors and data quality issues on your financial results? Is there no significant impact? Is there a minor impact, moderate impact? Is there a major impact or a severe impact? So once again, how would you rate the impact of errors and data quality issues on your financial results? We've got about 61% of the participants, and now 71% getting up there. I'm going to close the poll in about 10 seconds. I'll give you a quick final countdown. Five, four, three, two, one, and let's go ahead and see the results. All right, Mark, any surprises there?
No, no surprises at all. Actually, that is remarkable. I Do we see the percentages here in this?
Yeah, I see the percentages on mine. The moderate impact is 32%, followed by the major impact, which is 32% also. So I guess those are tied. Um,
Yeah,
21% minor impact, 11% severe impact, and then 5% no significant impact. So 5%,
interesting.
21%, 32, 32, 11.
Perfect. All right. So we can close that. I think I can close that here. I'll close that. Let's move up. There was a survey recently done that mirrors almost perfectly with what you said. Um, kind of a bell-shaped curve, right? Ranging from not severe to more severe. And what's important about this is that if you kind of add the moderates up, moderate, major, and severe, that we have about 62%. In this survey, it was closer to 75% of people in the survey were saying that mistakes are causing some big problems. Maybe that's why you joined the webinar. um, but it is a problem and it is concerning. Where do these come from? Well, we know where they come from. We feel this pain. For those of you who spent, any more than 5 years in this career, you've experienced an increase in transaction volume. We have this habit of collecting systems. We We may replace a system, but we keep the old system around for the historical data. Doesn't mean it's gone. It just means we have another system, and all that just adds to complexity. M&As certainly don't help; they make it worse. So it's no surprise that we've got these mistakes and they're causing a problem. Now, we as finance professionals, we track the progress of the business, right? We point out to the business and we let the business know how they're performing. We don't usually turn that focus inwards and don't look at what we're doing ourselves. So what I'm going to do is I'm going to take a little bit of time and I'm going to create an error dashboard for us. Okay, I don't recommend you do this. It might not be politically savvy thing to do. We don't want to let everybody know exactly what all our problems are, but it's worth taking a little time to look at. So Gartner had some interesting results here that showed, for example, like 18% of people reported making daily errors, right? And what that really tells me is that 82% of people either don't know they're making mistakes or they're hiding the fact that they make mistakes because we all make mistakes. It's okay, right? 1 to 4 numbers out of 100 that are entered manually are wrong. And between 50 and 30%, I'll call it a fifth of reconciliations have errors in them, right? But this isn't disastrous, right? Because not every single mistake that we make has a big financial impact, right? Um, Also, big errors get caught, and many of them get corrected downstream in processes, right? These are just kind of a nuisance. They take up a lot of our time. But there are also errors that do have a bottom line impact. And I'm only going to pick 2 areas of our function where we can measure these errors because they're common to most of us. And the first one's accounts payable, right? So um, we all have accounts payable, right? We spend a lot of time on it. Maybe you don't in your particular function, but it's always part of the finance function. Duplicate payments. I've put a 1% on here. I did some research. I collected it from different surveys, some of these figures, and I toned them down a little bit. Some of these surveys seemed a little amplified. I toned this down to just kind of say what the average case might be. 1% on duplicate payments. If you don't have a strict PO policy or you have multiple ERP systems, you have duplicate payments. Unless you have some very clever, highly intense way of removing them, you have duplicate payments. Um, Another issue here is missed discounts. If you have the average invoice takes about 15 days to process, 14.6 days. If you have any vendors that offer you 15-day terms, you don't even have an opportunity to take them. You can't pay the invoice until the terms are already expired. And fraud, I dialed way back. Research on this is somewhere between 3 and 5% of your AP and volume is fraudulent. I toned that down to 0.5% because nobody wants to believe that they're part of that 3 to 5% category. What I usually hear is people say like, "Oh, we don't have a problem. We had 2 cases last year. We caught them." I usually would say it's like, well, if you caught 2 mice in your kitchen, you no longer have a mouse problem. It's like, no, you have a mouse problem. You're just not catching all the mice, right? So um, there's a significant amount on the AP side, even if you have tight processes that's slipping through. On the accounts receivable side, we also have some issues. Most organizations have accounts receivable. These numbers will vary by business, but we have cases where your customers are taking unearned discounts, and because maybe they're only 2 or 3 or 4 or 5 days late, we go ahead and let it slide and we let them take the discount, right? Or maybe it's a small amount, it's hardly worth rebilling, we just let it slide through. Bad debts, those vary by organization. Somebody might ask, hey, are these bad debts really errors? I would say yes, they're absolutely errors. They're errors because we either granted credit to an organization that should not have gotten credit, or we failed to keep up with whether or not that customer deserved the same level of credit. And even at the end, after we invoiced it, did we spend enough time being the squeaky wheel and getting paid? Often not, because all of that takes time that we don't have. The last category I have here are threshold write-offs. These are pretty easy for you to quantify. Most ERP systems, you have it configured in your system. Anything less than $10, you write off, right? If a customer sends you $90 instead of 100, you write it off. Now, not every customer does that, but it does happen, and some customers take advantage of that. They add up after a while. What do all these add up to? Well, if they slip through and they end up on your financials and you need to restate things, which is happening at an increasing rate, that has an impact on your reputation, your share price, at least at a minimum, even if you catch all the errors, it has a result in your productivity. And you can do the math here. If you add up the 1.8% on your AP volume and that 1.1% on your revenue, you'll see you pretty quickly come to 2% EBIT from just these two areas with conservative estimates, not even taking into account some of the unique things in your organization. So I'll ask you, let's move to another question here to see where those come from.
All right, time for our second poll question to keep you all on your toes this morning or afternoon, depending on where you're at. Question number two is, what is the biggest source of errors in your finance and accounting processes? Is it the manual data entry and spreadsheets that you're working on? Is it disconnected systems or lack of integration? Is it a lack of resources? We all know that story. And lastly, is it poor data quality? So we have four choices here. We've got about 38% of the respondents have answered already. Jumping up there. All right, you still have a little bit of time. We'll keep the poll open for another 10 seconds here. Once again, is it manual data entry, disconnected systems, lack of resources, or poor data quality? I'll give you 5, 4, 3, 2, 1, and let's go ahead and show the results of our poll. All right, if you can't see the percentages, Mark, I'll just tell you 50% say manual data entry, 27% say disconnected systems or lack of integration, 5% lack of resources, and 18% poor data quality. What do you think?
Interesting. That it all of them. So all of them are reasonable sources of errors. There's actually some research on this one that I'll tell you that did not align with what people said here, but actually, in reality, the source of most errors is from a lack of resources. Now, of course, we could kind of pick this apart, like the fact that like your systems, you don't have proper interfaces or whatever might be because you don't have the resources, but lack of resources is cited as the most common reason for errors. So, in a lot of cases, in any of the cases that we listed there, the solution would usually be to hire more people and put people on some of those problems. But that kind of presents a problem for us as well because our workforce is shrinking. Many of you may have noticed this. This often does not come as a surprise. There are fewer people entering the profession. That's probably even decreasing now because people are afraid they're not going to have a job in this profession because of AI. Mid-career professionals are leaving. Those are usually management. They're leaving to go take other jobs that might be relevant to them, that don't have the stress that we deal with. And the fastest growing demographic are the one that's closest to retirement. So we kind of have this retirement wave that's coming. So hiring people is not going to solve the problem. We don't have people available to fix these problems. So what's the solution? Well, we're going to use AI, right? I mean, thank goodness AI came around as all of these things are happening. And so what happens there is we have these ambitious plans, right? These usually come from like executive leadership. We want AI to manage our business for us. We want that forecasting, analytics, analysis, scenario planning, which are all legitimate targets. These are all things that AI can help with for sure. And they all have some positive outcomes that we're looking for. Basically, fewer people to do better quality work, right? And find those things that we couldn't find before. The problem here is that these capabilities that people are asking us to implement are hard. They're really hard. They take a while, they take some skills, it takes time to build this up. And these are the things that are driving this failure rates. And instead of focusing on these hard things, we can get these same exact outcomes by focusing on things that are a lot easier, things that are almost guaranteed to succeed. They work, right? And that MIT survey that had the 95% failure rate even specifically pointed out that back office automation tasks for AI in areas like AP and accounts receivable are um, where people are having success, right? Reconciliations, error anomaly detection, all of these have the same outcomes. They're just easier to achieve. So if we want to be successful with AI to solve our problems, really what we want to do is just set reasonable expectations. Some of these things that work might not always be the most glamorous things, but they take us a step forward and they actually work. So let's talk about them. Let's go through the use cases that most I see with my clients most frequently work. Um, Before we do that, I'd just like to get a little information from you. Nick, you want to take that?
Yeah, certainly. Let's go jump right on in here. So we have our third polling question right now. Where is your organization on the AI adoption journey? First of all, maybe you haven't started, you're still exploring. Are you piloting, testing one or two use cases? Are you scaling, expanding across business processes? Or finally, you are at the advanced nirvana stage where you've got AI in your daily workflows. So we've got about 53% of the responses in right now. We'll give people a few more seconds to answer the question. Where are you on the AI adoption journey? Haven't started, piloting, scaling, or advanced? So we've got about 65%. We'll give people about 5 more seconds, and I'll give you the countdown. 5, 4, 3, 2, 1, and here we go. 41% have said they are piloting. 24% have not started, still exploring, and then an even split 18% between scaling and advanced. Mark?
That aligns perfectly. I was going to say that usually I see, and there's a lot of different surveys out there on this, that about 50% are in piloting. What concerns me the most are the ones that haven't started yet. That is the red zone. Why? That's a red zone because it people are in your organization using AI for sure. Whether you've sanctioned it or you formalized or not, they're using AI, and without any type of structure, formal governance, or acknowledgement of that, your organization might be relying on AI-driven processes without any structure around it, which could be kind of setting you up for some problems. So um, this group seems to be kind of aligned with what I see everywhere else. So let's move on to talking about some of those use cases that work for real, right? So whether you haven't started or you're advanced, these things might be useful for you as subsequent projects or starting projects. Whoops. The first one, I'm going to go through four of them. Again, maybe not always the most glamorous, but they work, right? First one's error and anomaly detection. So this is basically just looking for mistakes. I call this a no-brainer use case. You got a couple of scenarios. One, the thing tells you you don't have any errors. That's not going to happen. Next worst case is it's going to tell you about the errors that you already know about. That's not really so bad. But what the most likely case is, it's going to tell you about errors, some errors you didn't know about, hopefully many, if not most of the errors that you did not know about. And it's kind of a no-brainer. These are great algorithms. They don't require training. You can use them out of the box on day one. There's no security risks. They're built into a lot of systems. A lot of vendors that like support subledgers have these in them. You can buy standalone platforms that also do error and anomaly detection. A very, very high success rate here in that. Next one, reconciliations. Okay, it's more accounting focused. It slows close down. Reconciliations are kind of the bane of the close process. This is good AI work. This is, whether you have one-to-one matchings, many-to-ones, one-to-manys, or many-to-manys, this is a perfect AI task. And what a lot of systems and platforms do is they'll take care of the easy ones, the ones that are almost certain to be correct, And they'll kick out and say, hey, I've got these many to many's. Here's what I think happened. Can you approve this before we go ahead and take action on these things? High success rates here in this. Another one, I'll get a little more specific on the AR side, not just the AR in general, but specifically cash applications is one of my favorite use cases. Um, this is basically, for like manufacturing companies, this can be very complex, right? When a customer sends you money, you have to decide like what they're paying you for. This can be easy if your invoices are match one-to-one with your with payments. Often that's not the case. And it's like a reconciliation. It is a perfect AI task and can automate like 80 to 90% of the manual cash application work you're doing. AI here will also help you with credit management, like assessing credit for customers, dunning, proactive dunning, um, do all of those unjustified discounts, right, where we wouldn't rebill because billing a customer for $2 wasn't worth it. Here it's essentially it's automated. It doesn't cost us any effort. Um, the last category, which I'll drill into a little bit because it's really high value, extremely high chance of success, is invoice processing. So there's lots of steps in the AP invoice processing process. Um, but here is where money leaves the company, right? And once it's gone, it's hard to reclaw. So we want to be very, very careful. Now, what's nice about these processes is that they're often very well documented, they're very well structured. They're just manual. This is a perfect place for AI, right? You have some structure. You're using, kind of light mental work to follow that structure and follow the process. AI can jump right in here and do some of those things. I'm going to dive into that and break that apart because like I said, I don't like to be vague. I like to be a little more concrete. We're all familiar with the three-way matching process, right? You got an invoice. You need to make sure that that invoice matches an outstanding purchase order. You need to make sure that you received what you ordered, right? Um, Sometimes you didn't have a purchase order, which is kind of an issue, and we need to route it for approval. Same thing on receipt. If you ordered a service, we didn't really have a formal goods receipt. We need to route a request somebody to ask them whether or not they actually received the service, right? And once we've done that, we do this famous three-way match and we issue our payment. Some of this is already automated. I'm not naive to that, but a lot of it's not. We can have AI automate essentially the rest of this process, right? So, um, data extraction from the invoice, not OCR, right? So I'll just kind of pause there. If you say, I'm using OCR, I got this data extraction covered, there's better. OCR accuracy rates are between 40 and 60%. Using AI, using computer vision techniques, accuracy rates are in the high 90s of percent. And you don't need to send any templates to the system. It can decide what the values are, what the data is on the invoice automatically. We can use AI to do the approval routing, both on purchase orders as well as goods receipts. We can automate duplicate invoice detection across multiple platforms in real time. We can even there are even tools out there that can handle the entire help desk or the interaction with vendors when they ask for proof of or a copy of an invoice or something like that, or where's my check? We can automate that. We don't need to be involved in those processes. Fraud detection, of course, the three-way matching, um, optimizing your discounts. So this we can within seconds we can approve something for payment, and we can pay it on the 15th day of a net 15 terms or discount terms that are within 15 days. And we can even automate the payment processing. We don't need to automate all of this. If we're not comfortable with that, we can automate the things that we're comfortable with and layer them in over time. Just kind of nice. But this is three-way matching, right? What's kind of interesting here is that AI brings something new to the table that we miss. What we miss is that most of you, most organizations, most of your accounts payable is being done with preferred vendors, suppliers with whom you have a purchase agreement with. And we have signed, our terms of doing business with them that includes things like our pricing that's usually based on how much we buy within an amount of time, which is extraordinarily difficult to track manually. Welcome AI here, right? So we can compare for every single invoice, for every single purchase order that we send out, we can compare it against our purchasing agreements to make sure that the pricing that the price that we're paying is actually what we contracted. And that makes this a four-way match, right? And I don't have numbers on this. I tried to find them. They kind of were all over the map. But if you did an audit on this, I'm sure you would find that you are overpaying your vendors and you're missing out on discounts that you're entitled to take in your pricing agreements. So what does this equate to? Let's take your total invoice volume. I'm going to generously say that 60% of that process you already have automated. That's very generous, leaving you 40% of the work to do manually. Pretty safely, I estimate that we could automate about 80 of that, 80 or plus with AI, which brings us down to like handling 8% of our total invoices manually, right? That basically equates to a 92% automation rate. So taking you all the way from a 60 to a 92% automation rate. That's quite significant and actually pretty easy to achieve, in my opinion. So just kind of take a pause here. Nick, do you want to help me with the next question?
Yeah, sure, Mark. So for the audience here, we have poll question number 4. So please help us understand whether you have started with AI or not. What is your largest struggle or anticipated hurdle with using AI in finance? Is it lack of budget or buy-in? Is it data quality or system readiness? Project resources, time, change management? Is it data security or privacy? Is it the continuous AI technology change? That's a real thing. Or is it the unclear return on investment or the cost? So we've got about 35% of people have thought about this one. This one's a lot of answers here, and some of them might fit in more than one bucket. You may have multiple challenges, but I would encourage you to choose the one that you have struggled with the most. Is it lack of budget? Is it data quality, project resources, time or change management, data security or privacy, continuous AI technology change, or is it the unclear ROI or cost? We got about 78%. I think we've got a quorum. Let's go ahead and put the results. So the biggest one here, project resources, time, change management represents 30%. Data quality and system readiness, also 30%. Unclear return on investment, 17. Lack of budget or buy-in, 13%. And then rounding it out with 4% each, data security and privacy, and continuous AI technology change. Any surprises here, Mark?
No, no surprises. A couple things here. Data quality readiness and the change management issues came in at the highest. I always say it's like if data quality is like your biggest concern, a couple things to realize, like with AI, your data does not need to be perfect. That sounds contrary to what a lot of people say. Data needs to be good. Yes, for sure. Data quality issues will never go away, but it does not need to be perfect. And if you wait for your data to be perfect or like of some like arbitrary quality, you will never get started because it's always there's always going to be a mess. And instead, we should do is focus on using AI in places where data quality is not important or your data quality is already good. Um, the project resources and time change management is legit, right? We talked about that. We don't have people or time to do this, but there are some facts out here that kind of help us. These aren't the same kinds of projects like ERP projects. They are a little easier. They are definitely a lot faster. Um, I often see, and it depends on this tool and system, right? So I'm generalizing here across a broad range of projects that I've seen, but implementation is often like in months, right? Maybe 2 quarters. Most of projects I see of reasonable size are done within 6 months, and that's usually with the help of an integration provider. or a software vendor themselves, right? You don't need to build these things yourself, right? You can rely on software providers to do this. And more remarkable is that the ROI on these things is fast. It's lightning fast. If you do the math on some of those things I talked about before, and you can eliminate those costs or even just bring those costs down to 50% of what they are, I think you'll see that you can within a fiscal year, even if you did not budget or plan to roll out a system, you can implement it and have it pay for itself within a fiscal year. Of course, your mileage will vary. It depends on what you're doing, what your current circumstances are, but this is often the case that I see happening out there. Now, one issue, one side note that I'd like to add here is that I often hear from people that they would prefer to wait for their ERP platform to do all this for them. And I generally don't advise that. At first, that was kind of my take on it. This is my approach. And then I kind of came to realize, excuse me, that ERP platforms are huge, right? They've been around for decades. They have software code in them that has been around for 20 or 30 years. And it's hard to bolt on AI to one of these systems and get the full benefit. And we have a new collection of a new breed of software vendors out in the world that are doing a remarkable job of building their platforms with AI in them from the bottom up. Um, and the nature of the ERP systems appears to be kind of in transition where it's becoming more as the true central source of auditable data that's being supplied by satellite and auxiliary subledgers on the outside. If that was your strategies waiting for the ERP, I would encourage you to maybe rethink that a little bit. And if you want to do this, right, so the key point here on this section is that we want to make sure that we're pursuing use cases that we know work. Um, so some common AI traps would be the next topic. Again, whether you're just starting, haven't started, or you're well into this, I see 7 traps that people run into at various stages of their AI experience. The first one is inflated expectations. I kind of talked about this a little bit already, right? We shoot for these big projects and we often come up short, not because AI doesn't work, but because we haven't learned how to do it yet. And so, if you haven't caught on to it by now, I'm trying to encourage organizations to start small, right? Think big, but start small. Start with the easier to understand use cases that might not be so glamorous, but are guaranteed to work, and then build up that capability over time so that you have a better understanding of how AI has an impact on your organization. The second trap is fixating on headcount reduction. Look, I just a moment to kind of level with people here. AI is definitely going to create a shift in our headcount, okay, in the next 5, 10 years. Now, whether that's an increase or a decrease remains to be seen. There is research on both sides of that fence, but definitely our skills will change. And it's a little too early to go out and start promising that we're not going to need heads or we're going to save money from headcount with AI. And if you get out into that trap, then you may actually find that you need resources to handle work you didn't realize you were going to need to do, and you don't have them anymore. Instead, what I recommend here is to recognize that it's likely to happen in many cases, especially the use cases I mentioned today, but not to build your business case around it. I think it's easy enough to build a business case um, around other benefits that we can get, like I mentioned, like the reduction in errors and like increased cash flow from AR and reduced fraud and duplicate payments and so forth. Another mistake, another trap people run into is just kind of starting because somebody said we had to, or feeling like this impetus or this, pressure to roll something out. You need a plan. Every project that you do here should be creating some type of an environment on which you can build another success in the future. Right now, we can't come up with a perfect plan. I usually recommend 2 to 3 year outlook, right? Um, but we need to have some idea of what we're trying to do. Are we trying to improve customer satisfaction? Are we trying to, improve our productivity, manufacturing costs, throughput? What are the things that you're really trying to achieve? And then start pursuing the solutions that actually support your business objectives. Another trap is dropping your guard. There's this fallacy that, like, wow, if AI does something really fast, like a reconciliation, that it's accurate. Well, their tools and systems are becoming more and more accurate for sure, but it doesn't completely mean that they're not going to have a mistake. What I, especially when we're starting, if we're going to save like 2 hours on a task, it's okay if we spend a new 30 minutes to double check to make sure it's right. It's very quick to double check. You can strategically do that at certain checkpoints of the process, but I don't recommend just saying, oh, AI is doing it and like delegating the responsibility of being correct to AI because ultimately it is our responsibility to be correct. And it might feel like it's slowing you down, but in fact, it is not. It is actually setting the stage for subsequent projects that will be based on data that you know is accurate. Um, Another one is the vendor selection process. So there are a lot of vendors out there, especially targeting finance. Why? Well, because it's an area where there are a lot of benefits to be gained. The rules don't change here when we're talking about AI as for any other software. Start by deciding what you need done and pick vendor based on the ones that best serve those tasks. Right? There might be a lot of distracting functionality out there that sounds really neat, but at the end, especially for like back office processes, we don't need those things to fly. We just need them to work, right? And just focus on the things that are absolutely necessary to you. And also, I think that a lot of I think in the last year or so, we've seen a lot of I don't know what the nice word here is maybe not so good vendors that kind of fade away. The ones that have survived in the last couple of years are the ones that are stable, are good, but look for vendors that can show you what they do, right? It's not always possible to do a live demo based on your data. In some cases, it is, but at least see that in the project plan, you have checkpoints where you can see if the solution is working as intended with your data, right? That should be standard. Another point here is that you can't always expect to have like a 20-year vendor to choose from. Most of the vendors I've seen that are really delivering the most significant products are 5 years old. That's kind of what to expect here. So just because a vendor might not be around, have been around for 20 years, doesn't mean you should write them off. Trap six, misapplication of AI. There's three common mistakes here. Trying to automate bad processes. That has always been an issue. It's not going away. Can AI automate a bad process? Probably. In some cases, yeah. But it's not doing you any favors because as soon as that process changes or something goes wrong, you will have no transparency into what happened. You have to structure your process, probably more importantly than structuring the data before you get started. Chasing fringe cases is another problem. Again, stick to what you need, not to what you think you need. Stick to that 80%, the golden path. You can automate those other fringe cases later. Let's start by focusing on what the golden path process is. And then the final one, which I see probably the most frequently, is confusing desktop AI with enterprise AI. ChatGPT at everybody's desk is not the same as automating a business process, right? The desktop AI tools are great. I use them myself. I'm a big fan. I think they're important, but this is kind of like a new Excel, right? This is improving me as an individual. To improve the processes of the organization, we need to think a little better and bigger. And those aren't often solved with desktop AI tools. Those are solved by vendors who have carefully developed tools and platforms that specialize in a particular process. And the last one, pretty simply, I kind of alluded to this earlier. The last trap here is waiting for AI to get better or cheaper, or we'll see what happens or whatever, or maybe my ERP system's going to do this. Look, there are small things you can do right now that are not risky, that provide value, that start teaching you and your organization what works, what does not work, what effort it takes to actually get this done. And so just in summary here, it's these aren't new topics, these things that I brought up. These AI is like other technologies. We need to follow the same rules and not get lost or enamored with some of the capabilities that are available. So I'll wrap up briefly and we'll move to Q&A. Key points here. Errors are more than you think. Really, what I'm trying to tell you is that there are costs to doing business, or there are costs or mistakes that we're making that we don't realize that are impacting our bottom line, right? And instead of going after those soft targets like headcount reduction, you might want to take a little bit more time and think about what are some of these other areas that AI can help us with that nothing else has been able to help us with that can lower my costs and validate any investment in new solutions. Point two here, let's stick to things that work, right? Let's think big, but act small, right? Start with small steps, work on those things that might not be so glamorous, but we are certain are going to work. Let those things start to compound on each other and build some momentum going forward. Be realistic, right? Avoid some of these traps. Apply with what you know, apply the experiences you have from previous software here with AI, same way. And like I just finished saying before, like any other technology, this requires an effort. This is not as easy to implement as it is to use. We need to do some thinking around it and do this one careful step at a time. So what can you do here? I would recommend maybe quantifying some of your errors. I don't recommend the dashboard or publishing a dashboard that quantifies your errors every month, but like iteratively just kind of check like, hey, are we getting all the discounts out of our pricing agreements? How many unearned discounts are we giving to customers? Just so you get a baseline of what these things are costing you. Create a roadmap, get an idea of what the next 3 years looks like for you. Prioritize use cases that you know will work over the ones that you think will work, but might deliver some fantastic value. Keep people in the loop, right? Double check these things. Don't confuse speed with accuracy, and just basically like set realistic expectations. Avoid these traps. Think big, start small.
All right. I think that brings
Cool.
us to the Q&A portion of our session today, right?
Yeah. We'll do that. Thank you. Thanks for your attentions. Nice getting some of that feedback on those surveys. I appreciate
Oh,
that.
great content. By the way, awesome content, Mark. I learn something every time I speak with you, and so this is no different today. Very enlightening. We'll
Good.
jump to the
Okay.
first question from Janet. Thank you, by the way, Janet, for jumping in there and asking the question. Janet is asking how best to calculate return on investment for AI adoption. Apparently, Janet was in a Deloitte webinar recently. Was told that sometimes it's not easy to ask to it's not easily ascertainable to present a solid ROI case. Thoughts on that, Mark?
Yeah. So it depends, right? So here's the tricky thing with AI is that we can use it in a lot of different places, right? I don't know. I've yet to really find any areas where we can't use AI somewhere. So there isn't going to be a one size fits all to determine ROI. It's going to depend on what you're doing. I tried here in this session to kind of give you a feeling for the fact that like some of the costs that you're going to save are costs that you don't always measure. Um, and that session that you were in, was it Janet? I think you said, that asked the question. Yeah. Um, that was probably a realistic thing to say, especially with smaller starting use cases. You're not always going to get a 100% provable ROI on this, but if you can kind of think, if you create a plan, you can kind of think about how smaller efforts that you might do now that don't have a concrete ROI may compound and build into things or contribute to things that do offer a future ROI. That's how I would look at that.
Awesome. Thanks for that. Another question came in from Catherine. She's looking to get started, and Catherine is asking, "What is the best resource to start researching AI solutions for various applications? It sometimes feels hard to know where to even start when you think you have a use case." So, any recommendations for Catherine on where to start?
Yeah, that's tough too, because again, like we just hear like AI does everything and it does it magically. I'm just gonna sound a little silly here, but I use Claude. I'm a Claude user. I think Nick, you and I have talked about that before. Like I like Claude. Ask. These tools are good. Put it in research mode. Whatever tool you're using, they all have research modes, and burn your tokens on like the powerful model and think about what it is you're trying to achieve and ask it for a short list. These tools work. They will point you in the right direction. Um, you can also, there are people that can help you choose these things. It's something that I help people with, but there are other people like me that do the same thing. You can ask around as well, but I sympathize with the struggle there, but it is, you can get out of it. Another point on that: don't expect to see that list full of those big name software providers that you have been used to seeing show up on lists year after year. I almost would say is like those big software names you might sometimes even want to put towards the bottom of the list. Not because they're not good, but those solutions are going to be probably overpowered for most mid-sized companies.
Yeah, yeah, excellent question. And when we send the recording out after this, in the bottom of the email, there will be a link to our blog. So gratuitous plug for the Auditoria blog. It's called blog.auditoria.ai. It's AI and finance. So cool. We got time for another couple of questions, maybe one or two. The question, this question came in. Mark, you said you covered 7 common AI traps. Trap number 2 warns against fixating on headcount reduction, but realistically, leadership is going to ask about headcount reduction and ROI
Mm.
in those terms. How do you recommend framing the business case for AI and finance without making it about cutting FTEs?
Yeah, yeah. I always get this question. This comes up all the time. That's why I put the trap in, like, because we all get pressured to reduce the headcount. So there's a couple of things. It depends on the business circumstances. Look, the thing is that it's a trap. That was kind of the point. If you have to promise a reduction in headcount, you may be in a situation where you still need the headcount, but now you promise to get rid of it.
Hmm.
I'm going to just give you a fact here that I didn't include in the presentation. There's a kind of a line of research that is coming out now that's showing that um, AI, initially right now is actually creating an increased need for people to spend time and attention on. Um, Not everywhere, not always. Wall Street Journal had a really interesting article on this that resonated with me quite a bit, is that it's starting to expose all these other things that we can do. And because it seems so fast and easy to implement AI, we start charging down those paths without realizing that those things also require an effort. Right. So if you get into the trap of like following all these things and then committing to a reduced headcount, you could kind of be creating a little chaos. So, okay, what's the answer to this question? What I often will start with is say is like, look, are there any growth plans for the business? Most businesses will say yes. The real simple thing is, what you can get away with, if you have to get away with promising some headcount, is deferring headcount in the future, deferred additional headcount in the future. If you can get away with that's going to be a good one. The other approach here is going to be quantifying other errors. That's kind of why I did that in this presentation to show how there's an accumulation of small errors add up to big numbers. You don't even need to drop headcount.
Well, along with that, Kelsey, this might be the last question we have time for, but Kelsey is asking a question about how does AI eliminate or reduce manual data entry, including those errors, and what does that look like in practice about reducing and eliminating the manual data entry, Mark?
Yeah. So it depends on what the data entry is, but usually when you're entering data manually, you're taking it from one source and putting it into another. Okay? We've tried to automate a lot of that already, right? In our worlds, like usually, like we can do automatic uploads and so forth, but not in all cases. Sometimes we have to take two numbers, turn them into one. What's happening there is you're doing some thinking process, right? You're either looking at a document, which is a thought process, or you are looking at a PDF file or something and adding two numbers together and putting them something else. These are not difficult thinking tasks, and they happen to be thinking tasks that AI does very, very well. AI can very, very well look at a document, read it, tell you what every number on that document is and what it represents, and you can parse that out and either stage it for your approval before you post it into where it needs to go, or just automatically transfer that. Um, so I know I understood the question is like, hey, this is what I do now today. How do I implement those things? It's not always that easy because these are business processes and business systems, and they usually require purchasing some kind of a tool or a system that will handle that process for you. You can use a desktop AI solution to scan in an invoice and tell you what data is in it, but it's not going to post it to your system for you, right? You're going to need a professional grade system to do that for you.
That's absolutely correct. Couldn't agree with you more. Um, I think we're at time here. I personally would like to thank you, Mark, for spending the time with us today. I know I've learned something, as I mentioned. Every time you and I speak, I learn something new. I hope the folks on the call today also came away with some key takeaways, some things that are actionable. They can go back and sit at their desks later this afternoon or tomorrow and think about how they can implement AI within their organizations. We'll send out the recording after the fact, and if you do have an interest in learning more about Auditoria, um, feel free to reply to the message. We'd love to show you a demo of some of our AI solutions for FP&A. That's not the purpose of this call, of course. But on behalf of Mark, myself, and the entire Auditoria team, I'd like to thank you all for spending the rest of your time here today. And please enjoy the rest of your day.
Thank you all. Thank you. Thank you. Thank you. Great questions. Bye.